And I would like Ashish also to probably tell a couple of words on this. But a lot of startups start up in the bedroom, right? Koramangala in Bangalore, or erstwhile Powai in Mumbai. Ashish, how have you seen the growth of startups in the ecosystem in the last couple of years, last few years
In a
rather?
way, yeah, in a way, if you read newspapers and listen to Indian media, then you're doing minimum $1 billion company to be called startup. And so I think Mohit has a different startup definition which nobody today believes in, because the amount of PR that happens with the moneyed people, that the actual startups get missed out. But I agree with Mohit on the perspective that it has to be a young company. And of course, some of those companies may do bootstrapping also, but some of them may require money to survive and grow. And only thing I don't believe in is the addressable market. Sometimes companies start without addressable market, and then the market evolves, or the company evolves into where the market is. But effectively, young or old people starting new business is a startup for me. And in some ways, we also try to get funds. I have been a startup myself when I set up NSE. It was a startup. I raised funds for NSE also those days. But I started my own startup in 2000 called exchangenext.com, which was funded by Reliance. And then it failed. And so I have been a what I call a serial failed entrepreneur. And each time I went to raise funds, my friends, I've been in finance for many, many years, and most of my friends used to tell me, they couldn't tell me no straight away, so they would politely tell me, कि बॉस वो $25 million का टिकट साइज होता है बाद में आना. And I used to think यार 25 million होगा तुम्हारे पास आऊंगा क्यों? So effectively, most of the time you get no funding, and only when you get funding, you get some money. You pay some money to newspapers to announce that. That's why you come into the newspapers as a $1 billion thing. Other than that, I think keeping records. Other than that, there is no purpose of this PR business. But effectively, the startups require fund, and we have created a platform at BSE, which is called SME platform, which raises on an average 10 crore. But you can also raise 2-3 crores also. You can raise even 100 crores if you are a new business. And we have now a startup platform which you can raise even 50 lakhs. The larger issue with the funds, this kind of startups is platforms is the cost is very high because of merchant bankers and all. But we have been able to bring down the cost, and so you can raise funds even if you don't get angel investors or VCs or PE funding. You can come to BSC, and if you sell your stories to others, you will be able to raise funds.
Yeah, and I
Ashish,
would come to
is
that.
that the Ashish, is that the innovators growth platform?
Our platform's name is called Startup Platform, because Innovators Growth Platform in some ways, I think, is an NSE marketing. Ours is actually 11 companies listed on that platform. No vaporware. We do only realware.
Got it.
Ashish, and I'm going to come to that because that's a very interesting point you brought in. But just back to Mohit's point, yes, I agree on Mohit's definition. I had fintech for Amazon's cloud division, which is essentially AWS, Amazon Web Services, and we work with startups across the range, and it's amazing to see the journey. Right, you'll see two guys working hard in a bedroom in Koramangala, and a couple of years later, they've raised hundreds of millions of dollars, right? And talking about raising funds, which Ashish you mentioned, I want to bring in Upasana. Upasana, the founder of MobiKwik. Upasana, I remember there was a time when if you would put in your investor deck and every startup to raise funds like Ashish talked about, typically does this presentation to investors where they talk about what they're what they're going to do with the money and what's the exit strategy going to be. And Upasana, I remember a time when if you put in your deck that you are going to do IPO, people would question you again. They would be very doubtful, right? But we're seeing this spate of IPOs which is happening. It's Zomato in India, Freshworks in the US, Dinesh's IndiaMART here just happened as well. So I want you to give your journey and how the startup ecosystem has changed and how we have reached a place that IPOs are very normal now.
Yeah, thanks for asking me that, Sandeep. So I don't think IPOs are normal yet, but they're becoming normal. We would want them to be normal, and we would want them to be the destination, for technology startups as well. And unlike what you believe, it's not just two men in a bedroom starting a company. There are many women also, and we are starting in the living rooms, kitchens, and wherever a laptop goes, so to speak. And I'll just chime in a little bit on how people have spoken about how this, that, and every company today is announcing that I have raised a mega round at $1 billion valuation. And I just want to say that for the 10 companies that are doing that, there are 1,000 other companies, that are not doing that and are building businesses sort of the right way. And I don't know about what others thought when they got started out. I'm sure many companies start out with the thought process that M&A hoga and we'll get a great exit. So in case of MobiKwik, we raised our first check from Sequoia after having bootstrapped the company for more than 4 years. We were profitable. We had 50 employees. We had the license from the Reserve Bank of India to run a wallet platform, and we had a few million users and their money sitting in our escrow account. So we were very comfortable that we know the model and this is how we are going to grow it. And now we should get growth capital. And I still remember the first shareholders agreement says that in 7 years you will go for an exit, and the first exit option is an IPO. So I want to tell you that we are exactly at that same mark in the 7th year, and we still have time left. So I'm looking forward to show several other technology companies that getting listed in India as an Indian startup is the right way to build a company and to continue building from there on. It's one milestone, but there also, after you reach that, you want to keep building there on. How did HDFCs and Bajajes and the Kotaks of the world got built? They got built like this only. And I think the next wave is going to come. You're seeing how many applications are going to SEBI from technology companies. We should expect that trend to become even stronger as the companies that are planning to get listed this year get listed. It will create a huge momentum of this being a very, very viable strategy.
Yeah, and on that perspective, you talk about the number of companies lining up for IPOs now. I actually want to bring in Dinesh ji and Ashish ji on this because you brought up two important points, Upasana. And for the audience, folks, this is going to be an interactive session. So if you have questions, please put them in the chat. We're actually looking at it. So if there are questions, we'll pick them up and ask the audience there. Don't wait for the end; just put them in. And Dinesh ji, I wanted to ask you this question, right? So you've already gone IPO. So what's interesting for me in this panel is we've got from an investor, we've got an exchange, we've got a post IPO company, we've got a pre IPO company, right? It's a very diverse. You've gone through the IPO, and I want you and Ashish to kind of demystify the IPO process, right? So for all of us, most of us just see that it's listed on the exchange and there's a money that's valued across added to your name over there, right? Your company's name. But how is the process like? And a lot of there's always been a talk about India being very there being a lot of red tape, but I don't think that's all changed right now, right? It's become quite simple. So I wanted you and Ashish to essentially talk about that.
Okay, Ashish, you want to go first?
No, I think you are the entrepreneurs. People look up to you more.
Okay. Yeah, so I think IPO is not about the red tapeism or bureaucracy. So there are two kinds of people you typically deal with. One is the regulatory and the exchanges, which is which we feel that in India today is as smooth and as fast and as organized probably as anywhere in the world. Contrary to the popular past belief that going past SEBI or going past BSC or going past NSE is a difficult task. I can tell you in our entire IPO journey, it took just 2 months to get the SEBI approval. We didn't even have a single call with them. The kind of document we submitted online, we didn't have to submit any clarification. And the bankers are now experienced enough. Any banker, so all of them are good. And bankers have a team of experienced set of people who have been there, done that. So they know what is it that our regulators expect, and what should be presented to them. On the second side, I think you are dealing with bankers and investors. So you are doing the roadshow along with the bankers and all that, and that experience is wonderful. I think you can never imagine the number of investors across the world, in every type city, sitting there and carrying so much of money, and they are so intelligent people that you are able to explain them your business in 45 minutes, and they are able to ask the right kind of questions to you. So I think you meet some of the very smartest people on the earth in that whole process, and you learn and introspect so much about your own business in that whole process. So that's a wonderful journey. The only piece which is still very muddled is the initial price discovery. I mean, and we have been having this, because if the initial price discovery was right, why would the IPOs immediately after the IPO would go 50% higher or 40% higher? The whole purpose of the initial price discovery is that they should be in the range of plus minus 20%. I think that piece is still not very technology driven, and I think over the time we will probably get there. So, other than that, I think IPO, it's more to do with internal preparation, because the way we run as entrepreneurs, I think, do we have this quarterly financials preparation properly? Do we have all the answers? Because we think that most people would not understand your business so deeply, but actually you are right. You will be surprised the kind of smart set of people you will meet, and they would ask very difficult question, which you also know probably, but you have never tried to answer that. And in that whole process, you actually become better. So I guess the entire IPO process is a very wonderful journey. Uh, the and people are now more open to growth-based company, profitable company, niche areas company. When we went IPO, I think we were the probably second, third technology IPO, and we were, I think, after a long, election period, we were the first one to go IPO. But I think it's the best thing that has happened, and this whole technology piece, in this century, everything would be technology. It's just financial technology or production technology or marketing technology or HR technology, or so everything would be technology. I mean, I don't think anything can run. 100 years ago, maybe when electricity came, people said this is an electro machine or mechanical machine, but then everything became electrical. Similarly, maybe 200 years ago, mechanical things came. So similarly, I think everything will become technology, that's for sure, over the next 10, 20, 30 years. So I think the spate of these IPOs are coming. The problem solving technology using internet technology, using mobile technologies, the problem solving is very difficult, very different than what was happening in the previous decade. And this whole IPO is because of the market size expanded quickly because of this whole mobile phone. It's only 5-year-old, 6-year-old piece. Though we can say that it was invented in 2007 or 2010 as Android or as iOS, but I think it actually start crossing the threshold somewhere around 2015, and then Geo happened, and then the whole market boomed. So everybody and all of these companies, they were all typically started around 2010 or something. At least the product started around
Yeah.
2010. Even for IndiaMART, the first product that we did was 1996 to 2010 was very different, and then from 2010, and most of these companies matured in these last 10 years. Whether it is MobiKwik, whether us, or whether Zomato, and everybody like that.
Yeah.
So I think these are great times, and very good companies will emerge, and good returns to be made by investors. Fortunately, we have been able to provide good returns so far for the investors over the last 2 years.
Very true. In fact, Jeff, the Amazon founder Jeff Bezos has got a talk on TED, which he did way back in 2000 when the bubble crashed, where he talked about how internet is actually like electricity, and we just don't realize it. Right? And Dinesh, what you're saying is that's exactly what we've been seeing here. Ashish, you know, I wanted to pick your brain on this, right? So you talked about the different methods startups have to raise money, right, and list. But I also wanted to get from you the perspective of listing, right? So one is listing for an IPO via SEBI, but you have your own SME exchange, startup exchange. Can you speak to us about that as well?
Yep. So basically, if you, for anyone who is an entrepreneur, what is an IPO, right? In IPO, first time your shares are being offered to public. Now it's basically the market doesn't know you, right? So they need to know you, for which they need to write up your merchant bankers. You appoint a merchant banker or an investment banker in American terms. You appoint them, and they come and ask you 5,000 questions about all the directors, their education, their legal problems, everything which you would want to hide. They want to ask you. Then they will write a nice little story, but under which they will write all the bad things about you. And you have to tolerate, because somewhere on the line, that's what the world is all about. Indian Indian IPO framework is basically disclosure based. That you need to disclose that whatever good, bad, ugly you are doing or you have done in the past. If you have failed class 10th exam, don't say that you are number one or something like that. You have to say you are number one failing. But otherwise, don't try to hide anything. Don't try to be untruthful, right? And so those guys write that story. Then they go to the SEBI in case it's a large issue. If it's a small issue, which is called SME or startup, they come to the exchange, they get it cleared. And so in SME or startup, the idea to execution is probably close to 3 months. From appointing a merchant banker to going live and listing. Whereas in a large issue, because there is a SEBI scrutiny of all your documents and all, it may take 2 months more. And that's where they may have also some questions. Some other people may have questions. You would also announce the prospectus. What is written about you is called prospectus. It is filed with the exchange and also with SEBI if it's a large issue. And then everyone can comment because your detractors, your enemies, everyone in the world can throw stones at you. And if they are found to be true, then you have to also give some errata and more information. And then, of course, once you have disclosed everything, it comes, people kind of have to listen to your story. That's what Dinesh spoke about in roadshow, as it is called. You go and market your story to different people. I have done several issues myself. One of them was BSE's own issue, but CDSL issue. Before that, I had done Reliance Petroleum issue in 2006-7, if I recall correctly the dates. But and so you end up marketing to various people, including the retail investors. So you go to Rajkot, you go to Jamnagar, you go to Indore, and kind of call people, make them listen. Many of them are sleeping. They come for sometimes snacks only, and you think mera paisa waste ho gaya. Don't worry. Sometimes it happens like that, So, but you have to tell your story on the television in whatever way it's allowed. And then the public issue opens. People, if they like your story, they come and kind of subscribe to that issue. Sometimes it gets oversubscribed. Don't get impressed by oversubscription, because finally you get the money only what you ask for. So if you get oversubscribed 100 times, it is only for ego problem. It actually increases your cost, not any efficiency of raising capital. But sometimes most of us live for ego problems, right? So we want to say my issue got oversubscribed 51 times, but I got only 1x, right? Not 51x. So all this stuff, and I think you mentioned about red tape and all. I think as Dinesh said, basically the issue is about the market knowing about you. You are coming for the first time, so market has to have as much information about you, your company, your past, what you plan to do, and everything. And that's where they will ask you questions. You might think, "Kyun pooch rahe ho?" This is red tape. It is not red tape. It's basically investing in you, making partnership with you. He might be putting only $1,000, but that 1,000 rupees is important for that guy. It might be important for a guy. 1,000 rupees might be more important for that investor compared to a guy who is putting billion in your company, because for him, it might be $100 billion. So for him, that 1 billion may not matter. But you have to answer everyone patiently. You have to have correct answers. And sometimes, as Dinesh said, those guys will know bit more about your business than you know. And you have to be humble to understand and try to be honest. Broadly speaking, that is the story. And once you list, of course, you ring the bell. It is more a drama. But finally, also he mentioned about. I mean, it's good to be at least doing positive drama, right? So that's like a culmination of all your efforts and all your merchant bankers, and of course, they also want a party from you. So in the evening, they then call you for a party, and of course, you have to pay the bill, right? Provided you raise a fund, you have to pay, right? So basically, for me, it's important to understand that there are what I call important part of this, which is compliance. All your disclosures have to be there. That is the compliance. Then, of course, once you list, you need to disclose every important information that comes your way, any material information. And exchanges have a portal through which you can load that information about your quarterly results, any material contracts you get, or something happens to your company. Some strikes happen, some takeover happens, all those things you have to do in time. And also, it wants you to not trade within particular time as insider traders and all. So those are minor compliance. For me, if you can do GST in India, I think the exchange compliance is a cakewalk, right? Before GST, I would have said exchange compliance was slightly difficult. Today, if you can go through GST, I think you have won the world. So don't worry about too much about exchange compliance, because earlier, why people were worried about not listing is that they were also not wanting to pay taxes. Now that everyone has to pay income tax and GST, might as well come and create wealth, boss. And wealth can be created only on exchange. Many times I ask youngsters that what is the similarity between Dhirubhai Ambani, Ratan Tata, and Narayan Murthy? They are in totally different businesses, different age, different temperament. But all of them are great people, right? Big people. All of us, at least business people, kind of worship them. But they all became big because they listed on BSE. So if you want to become big, then come to BSE and list, right? Without listing, there is no wealth creation. Let us face it, right?
Ashish ji, you're one of the best marketers I've seen. There's a big fan base for you in the chat that I can see right now, and you've done a fantastic marketing for
मेरा
BSE
ऐसा है,
right now.
without पैसा जो कर सकता है करो, पैसा खर्चा करके नहीं करने का.
But you brought out an important point, right? And I want to, Mohit, I'll get to you in a while, because there are a couple of questions in the chat which I want to ask you. But before that, a point which Ashish ji you brought out was, founders are some of the most optimistic people that I've met, right? And I know because I was also a founder, but if you have to win a segment, right, against all odds, you have to be insanely optimistic, right? So they are some of the most optimistic people you meet. They'll always be upbeat, they'll be gung ho. But when you're going IPO, it's the other way around, what you talked about, right? You have to talk about all the reasons why this company might be a risk, right? Similarly, you go from, having, a little longer term view and building it for your investors like VCs and PEs to quarterly results, right? So I want to bring in bring in Dinesh ji and Upasana over here. For their perspective, right? How there's a mentality change that happens, right? And not just a mentality change. I think Upasana, we were talking about some of the internal changes you have to do in companies as well, which is not visible from outside in preparation for IPO. So I wanted both of you to talk about how your mindset changes and the company changes as it prepares for an IPO.
Dinesh ji, you want to go first or should I?
No, ma'am. How can I? You have to start.
Okay, I'll go first. So, Sandeep, there's a lot that needs to be sort of updated and refreshed in the way we do things. So I can tell you previously, every time we were trying to, meet certain business goals and one had to think about hiring, we would think about hiring in tech and hiring in business. And marketing and other functions we karte hain, but come. Now I'm only hiring in finance because I have to, when we started the IPO process, sometime end of January, early Feb, I realized the amount of work that is going to go into just getting the financials ready. I mean, you have to get the current year financials ready. And we had not adopted Ind AS. So it was the first time Ind AS transition. getting FY21 audit done very quickly, and restatement of the prior years as well. And all of this I wanted to do, by 31st April. Of course, वो हुआ नहीं because COVID हो गया and everybody in Delhi fell sick in a big way. But even so, getting all of this done we had a very small team of, about 25 people in finance when we started in Feb. And I think we have hired significantly now, just to get over that bar of getting our financials ready. That was one area. The other area we required, where I must say I got some words of wisdom from Dineshji's brother, where company secretary and the compliance related work, which of course happens business as usual, but you don't think that the quantum of work is going to be so much in order to file a DRHP. So thank God I spoke with Brijesh one day and he told me कि आप please अच्छे CS and lawyers hire karna, because there will be a lot of work for your internal team. Forget about the battery of lawyers you will have to hire for the IPO process. And thankfully I did that and beefed up the CS and legal team, because these are the areas where you do make investments, but you don't make as much investment as you make in the other areas as you are growing up and maturing as a company. And when it gets time to do this, from personal experience, I can tell you, getting this 400-page draft red herring prospectus ready, आई थिंक दैट इज लाइक पूरी जिंदगी की पीएचडी कर ली और उसको ठीक से लिखना है कि क्या क्या किया है एंड ऑल ऑफ दैट. It's very enriching to just go through your entire company's journey all over again, but to write it in a manner where a sophisticated investor will be able to appreciate it, a regular retail investor will be able to appreciate it. It's very difficult. And of course, there are a lot of rules and regulations as to how you can write, what you cannot write, and what you cannot write. It's like writing a novel, is what I would say. Very factual novel. Actually, every word is fact checked by the lawyers. This is something I learned during the process. Every single word in the document is fact checked by not one but 3 different law firms. So this was all very new, and I think that getting the right type of people in your investor relations, finance, CS, and legal functions is sort of very important just to get to the listing. And then I'm sure that after that also the microscope is much larger as a public company than it was as a private company. So you do need these teams to help you maintain your quarterly filings and announcements, etc.
Yeah, so I think that was for us. By the time by the time these people are filing DRHP, at least I had gone through, Sanjeev has gone through, and many others have gone through, and Sanjeev had gone through long back. So I actually went to BSS Money and Sanjeev to actually ask how is it all going to work. We had to create a IPO committee which met every week on the progress and everything. But yeah, but going through all of that actually gives you so much grip on the company, grip in terms of the answerability and knowledge about the company. What is the weaker points of your company? What is the stronger points of your product? And preparing for in a private fundraise, you maybe meet 10, 15, 20. I don't think people keep saying that we met hundreds of private investors to get one, but that, at least for me, it didn't happen. I think 1 out of 10 succeeds. But here, just because you are going IPO, there are about hundreds of investors who are interested in learning about you, and you have to go and so anybody who is taking 10,000 shares in your company comes on your con call every quarter, and you have to be preempting their questions, because if you're not prepared, as we came for this panel, we preempted these questions, right? So you come prepared for what all different type of questions are, what all different type of answers can there be, what all different, and those people can join from anywhere. Even today, when IndiaMART quarterly con call happens, about 250 people join. So you are suddenly answerable in an hour, 250 people, and they can ask any set of question, any small set of question. So I think that's the kind of visibility and transparency that you bring in that whole company is great. And obviously, sometimes it slows you down because you can't do that, you can't do this, you can't do that. But at the same time, if you're taking money from public, you have to be having some discipline. You can't be playing with other people's money just like that. So I think all in all, it is the great thing happening right now. I think 2021 is going to be proving a changing year for Indian internet industry. And suddenly, at the beginning of 2021, we were like 3 companies listed in 15 years. At the end of 2021, we will be probably 13 company listed. So this 2021 is going to be a great year, and I hope we continue to with this journey. That 2022 may be better than 2021 even. So
Yeah, yeah, no, absolutely. I think, in fact, someone in the comment section has written, there's so many IPOs happening now, right, after a very long time, right? And I think it's all about market sentiments as well. I want to take a little bit of reverse gear. There was a couple of audience questions as well, so I want to bring in Mohit for a bit. And Mohit, just taking a little reverse gear. Let's go back to the early stage of startup, right? It's not just the IPOs that have changed. You're having a lot of IPOs that are happening right now. But early stage startup funding has also changed. And someone in the audience also asked about, raising in India versus raising in US, right? So talk to us about how early stage startup funding is done for the founders over here or potential founders over here. How does the market look? Should they set up a company in India and raise from Indian VCs, or set up a company in US and raise from US VCs, like a couple of other companies have done, other startups have done. So just walk us through that.
Sandeep, Ratan Tata famously said, "Be Indian, buy Indian." And Mahatma Gandhi also said, always consume Swadeshi. So I would never propagate any Indian startup to go out and set up shop anywhere else and raise money there. I think, we are in a cyclical bull run. The next 10 years, there is just so much to be done in this country. Apart from, I don't know if the BSE will touch 1 lakh mark or whatever it will be, right? Then that's a byproduct. If you look at core corporate earnings across the board, everything is going up. We, as a country, we're going to have the best golden years of our life for the next 10 odd years. So if you are starting up here, this is the right time for you to do it. You actually already missed the bus by at least a year, but it's still not late if you take a 10-year view. There is still 10 years for you to make that opportunity. The only thing I urge people to do today when they start up is build a business try finding a product or try finding a problem and then try finding a solution. What has unfortunately happened in the early stage space today is that people have come out with solutions waiting for a problem, right? Like today, this morning, somebody gave me a toast and a butter, right? And the butter was made up of almond and so many other random things. Now, honestly, I think Amul did a fab job in making butter the way it was. Do I really need a D2C product which is doing butter in a different way versus the traditional butter? It has the same ingredients, right? Why are we putting almond in our butter? So all I'm saying is, on the early stage side, there are a lot of opportunities. You need to be opening your eyes and finding the right opportunities versus just doing something which is not going to have a great product market fit in the times ahead. The ecosystem is as buoyant as it can get. There is enough capital available in India. There's enough capital available for India by local investors as well as global investors. For us managing domestic Indian funds, we are seeing renewed LP interest across the board. Large family offices, mid-family offices, everyone saying, "Boss, we want a piece of this pie. What is happening in technology? We want to be invested there." Multiple angel investor platforms have come up. So I think, summing it up, you have to raise in India, you have to build in India, build for India, and you can list in India. I think, our regulators have done a great job in building a great platform, in bringing in the right checks and balances, like what Upasana and Dinesh mentioned. I think the next 10 years, if you think 2021 was great, wait for 2025, it'll be greater, and wait for 2030, where the constituent of the BSE 500 will have 200 plus technology companies. A lot of your old junk is going to get thrown out.
Yeah, and we see that happen in the US, right? So in all the major indexes there, it's that.
And Sandeep, let me just add to that. A common myth is that if you are housed in India, or if you are an Indian company, or if you are listed in India, uh, you will have difficulty in raising capital, or you will have difficulty in achieving valuation. The West will pay higher valuation. Now, just to give you one perspective here, the most recent one is Zomato. I think they are listed at a higher the valuation multiple than DoorDash and than Uber Eats. They are having almost like 70-75% foreign investors. In our case, in IndiaMART, out of the total free float, two-thirds of free float is owned by foreign institutional investors, foreign investors. We have who's who of the shareholder that you can think of on our cap table. The second part is the regulatory part. So, if you were like like Freshdesk, if you were from day one had a customer base in US and had an investor base in US and you were housed there, that's a different issue. But today, as per RBI rule, uh, I think any startup which initially is born in India and then wants to do a flipping and then have a subsidiary here in India is a completely illegal and can amount to a round tripping FEMA laws, which can be very, very dangerous for the founders. Actually, not for the investors. So, investors have nothing much to lose, but it can be very, very dangerous for the founders. And to this whole piece that money is not available here for Indian companies, that's a complete myth. From Japan all the way to US, everybody, all the investors are now ready to invest in your Indian company housed in here in India. There is no need to go to Mauritius. There is no need to go to Cayman Island. There is no need to go to US. Anybody who needs to invest in India will come and invest in India. I mean, so you don't have to be intimidated by the fact that somebody said that talent is only in Koramangala or money is only in Silicon Valley. No, if that was the case,
Dinesh, just a little thing on the talent part, okay? Talent has become really expensive. Now, whether it's Koramangala or whether it's Noida or whether it's Pune,
yeah.
talent across the board has become expensive. Because what happens is
So
when you
have
have
startups become expensive?
exactly, right? So startup valuations have gone up. Recently I heard about a 21-year-old kid who got a BMW bike along with a sign-on bonus of 61 lakhs. I mean, I don't think any one of us started our careers there. I'm personally struck by FOMO because being an engineer, I never really used my degree well. So I'm actually learning Python 3.0 because just want to keep myself relevant in the future. Taki Dinesh ji might give me a job with a BMW.
I think a good story to remember here. It's actually a Jeff Bezos story. Once upon a time, he offered people, I think, 1 or 2 or 3 months salary. If they wanted to go, and many people took that and left. And he said, "Well, good riddance. We got rid of all the people who were not really here to work." So I think this frothiness right now in the market from a talent perspective, I think it's okay. These things have happened in the past as well. And what happens is that, when there are problems in China, too much capital gets deployed in India in the private market. And when too much capital is deployed in private companies in India, they just start going crazy, whether it is in terms of marketing spends or hiring, etc. Then one fine day, their balloon bursts, and again they are back to, offering one-third salary of what they were offering. So I think these are all fairly temporary fads. And my personal advice to any founders who are clued in of smaller or earlier stage startups or even mid-scale startups is that ignore all the noise in the system and create your only thing you can do is differentiated value proposition, whether it is a differentiated value proposition to potential employees or potential users. You have to think hard about it and then you have to message that out, and that's the only way you're going to get committed and loyal employees and committed and loyal users.
Yeah,
And just to
let's
top up on
get
what
back to
It's
road to IPO. Let's not convert this into an HR session.
no, but
But it
it
remain
reminds me of
a road
that.
to IPO.
Yeah, it reminds me of that ad, right? So there's this guy who wanted to be the first person to go to the North Pole, and he put this ad. saying that high risk journey, you won't get much pay. Possibility of coming back alive is very less. But if we come back, you're going to have recognition, fame, and all the money you can think about. And everyone, like he had so many people coming in because they wanted to join him on the first to be the first person to reach the North Pole, right? I think it's a lot about the messaging as you said as well. But agreeing to Mohit's point as well, the funding scenario, like for folks who are wondering whether should I set up in India or the US, it's not 10 years ago. Like I've seen how the ecosystem has changed in 10 years. The number of funds that are there in India today is at an all-time high. The number of Ps in India are at an all-time high. The number of accelerators, incubators, the support systems that you have, there are support systems today that didn't exist 3 years ago, right? So there is no reason for you to kind of go and say that, hey, I want to set up in US just because I think there's more funding there. It's not true. A lot of funds, especially in the fintech sector. So just
And also, the kind of if your customers are here in India, and if your development center is here in India, I mean operations are here in India, it is unnecessary cost, and it is unnecessary time wastage to you don't really have to unnecessarily invite legal complications.
See, there are 2-3 reasons I'll tell you. What happens is, in US, if you have to list, your minimum ticket size of listing raise should be at least $250 to $300 million, which means the company size should be probably $1 billion plus before you want to think about it. If you're below that, anyway, you have to be here. The second part, over last 10 years, marketing has been done that if you list in India, you don't get money and you get taxed more. The fact is, the tax, which is actually on the capital gain tax you pay, is only 10% in India. So it is the lowest tax. If you are having income tax, then it's 40% plus. But if you have a capital gains, which is what you get after selling your company, it's only 10% tax. It is unbelievably good, I'm telling you. So whatever marketing people do, normally what used to happen is, most of the time the funders used to be from Singapore structure or Cayman structure. They wanted to list there for their benefit, not for your benefit.
Actually,
Today,
just to add to what Ashish is saying, even at $1 billion, it's better to be in the top 1,000 companies in India than to be one of the small caps in a very large number of listed companies in the US. So from that angle also, doesn't really sort of make sense for an India-based company having a market base in India to be listing abroad.
and today, if you want to raise 1 lakh rupees, BSE runs 2 incubators. Okay, one in Bombay in BSE building and one in Varanasi in Banaras Hindu University. We'll get you that 1 lakh rupees also. If you want to have 1 lakh crore, we'll also try to get you that using the IPO part. But if you want to raise 10 crore, we are there. If you want to raise 2 crore, we are there. And somebody asked question on how much it costs for SME to raise around 30 to 40 lakhs for 3-year market making and merchant banking. Right? So if you raise 10 crore, probably it's 3%. Somebody also answered that. Effectively, the cost is really low. Nowhere in the world this kind of low cost listing happens on public platforms. And that's why it's a golden time. And everyone doesn't require those $100 million to burn, right? I mean, giving advertisement on a cricket match, for me, is a total burning. I mean, with no.
Ashishji, I can sense that you don't like cred too much.
So there's actually a question here, and I wanted to ask this because I think this is on a lot of people's mind, right? There's a question: is are we in a similar situation as in the dot-com bubble? Because we are having so many IPOs, there's so many new technology companies going IPO, and I wanted to get and this is a question from the audience actually. I wanted to get the audience thought right on Ashish ji, Mohit. Anyone feel free to be shared.
So here I would like to say something, Sandeep. You work in Amazon, and Amazon is a pre-IPO, pre-99 IPO story. And Amazon, if I remember correctly, in the entire journey they had raised only twice the public money.
That's right.
And at the time of IPO, and one more follow-on. And they've been, it has been said that they've been loss-making ever since. They've been cash positive since 2002. The cash flow positive since 2002, and that's available publicly. And they've raised very little money externally. I think the bubble and burst is because we overestimate the opportunity in the short run and underestimate the opportunity in the long run. So what happened in '99? Yes, few companies were wrong and they vanished. And but look at Amazon, look at Google, look at so many companies, Netflix. So look at many companies from then, and they have become the great companies today. But and similarly, I think the market size has expanded big time from say 500 million computers or desktop or laptop to suddenly 5 billion mobile computers. Now and now you can do voice, now you can do different languages and everything, which wasn't possible now. So I think the market is definitely very big in the long run, but at the same time it is very difficult to for people to judge whether it is good in the short run or not. And so everybody keeps guessing it, and sometimes they go on the other side and sometimes they will come on this side.
Yeah, I think we just have about 1.5, 2 minutes left, but that's very true, right? So a lot of people are in the assumption that Amazon didn't make profit. Well, that's true. Technically, we didn't make profit. We were cash flow positive, and Jeff made sure that it's a key part of our culture here, right? So I don't know if folks know, but we have 14 leadership principles. It's now 16, but one of those leadership principles is frugality, and that's something which came up, even pre-IPO. So Jeff Bezos used to have door desks. So he would take out a door and say, "You want a desk? You are hiring new people. Just take a door, attach legs to it, and make it a table." And the idea was to be frugal so that you don't overspend money, so that you're always cash positive. And that culture, even till today, the size that Amazon is today, still exists amazingly, right? It's one of our leadership principles. I think we have another 30 seconds left. Um, any other things anyone else wants to add before we close the panel?
No, I think just one last word to all the audience here, right? We're all sort of in different ways supporting the Startup India mission and saying that you should if you have an idea in mind, you can go out there, build it, and reach an IPO stage a lot quicker today than you could do so 10, 20, 30 years ago. I know so many great legacy businesses in the 80s and 90s who could never see the light of day for IPOs. That has changed drastically today. So just go out there, follow your passion, follow your dreams, start building, forget all the froth on the side. And I'm just trying to sum up everyone's views here in the panel, right? Forget all the passion, forget all the froth that's happening out there. Keep building, and the next 5, 10 years, if you are in this country, you are going to be extremely rich. Pay your taxes. Don't try to evade them.
Very true. And on that part, I want to talk just one sentence is that what I've seen is typically when there's a time of pain in the country, you see a lot of amazing companies being started at that point of time. Zomato, MobiKwik, Upasana started in 2007, 2008, right? Around that time zone when, things were tough within the country. And we had a pandemic last year. So you would definitely see like 10 years down the line, a whole number of new companies which are going to go IPO with a lot of wealth creation.
Sandeep, what I would like to say is that we should all aspire and hope and work very hard that next 10 years, Indian stock exchanges में अपना फैंक बनाएंगे. That is what we should aim for.
Yeah.
Yep.
And अपना MI तो बन गया ना, MobiKwik और IndiaMART तो यहाँ ही है.
I meant, we need those 5, 6 sort of names to emerge, and then of course there will be many more companies, in the pipeline. I meant that, like, let's create really valuable, long legacy technology companies.
Absolutely.
So and basically come and list on BSE and become big.
Absolutely. Awesome. Shivani, this was a fantastic session. I think we had a wonderful discussion, and I can see from the chat itself, it's a very lively discussion and some great comments. So I would like to thank all of you, Ashish ji, Dinesh ji, Upasana, Mohit, all of you for taking your time out to speak to me on this topic, a very relevant topic, and I think we inspired a lot of people. Thank you so much. Shivani, back to you.
Thank you. Thank you so much, Mr. Lakshman, and thank you everyone for this enriching session. I would also like to thank our partners and our audience to join this session as well. We are signing off. Thank you.
Thank you.
Thank you. Thank
Thank
you,
you.
everybody. Bye bye.
Thank
Thank
you.
you.
Thank you, everyone.